FTX exchange went from billions to zero within a couple of days. Crazy story in which people gave them hard-earned money, they gave the people some poker chips, and then it didn't really work well. In this episode of Investory, I'm going to explain what is cryptocurrency, what happened with FTX, and how can you keep your money safe so it doesn't happen to you too. Howdy everyone, it's Yochanan here. I'm a computer engineer, a licensed realtor in Austin, Texas, and I don't own any cryptocurrency, even though I do believe in the technology. Interesting. Given the recent turn of events and the fact we are living one of the biggest dramas in the financial world up to date, I want us to have an overview of crypto so we can understand what is it, how can we mitigate risk with crypto and other types of investments, and what actions should we take immediately to protect our investments. Before we start, let me just put it whoa, hold up, it's all from the future, and I must tell you that during the production of this episode, the editing and everything, some crazy things happened, so watch until the end, because I'm going to come back and give you the gist of it. Let's get back to the episode. Disclaimer, I am not a licensed broker or a licensed financial advisor. I have no idea about cryptocurrency. I'm just a guy speaking their opinion. Always do your own due diligence, always consult with a licensed professional, and let's start with fundamentals. So, cryptocurrency is a unique type of asset. Its value proposition is that it's not replicable, B, very easy to move around. It's a virtual asset. It's not like a gold thing that you need to take with you in the airport or whatever. And C, not governed by any specific entity. Typical cryptocurrency is being manufactured by math or the blockchain and not by a specific entity that can create more or less of the asset, reducing or increasing its value proportionately. So the value proposition, it's basically these attributes. It's an easy to move money that is not traceable, very hard to steal if you do your things well, and not governed by any specific government that can increase or decrease its value. It's important to remember these benefits because that's the value proposition, and if you're not using the right methods, then some of this value is lost. With all of that, I want to mention the difficult part of cryptocurrency, which is storing it. So people who practice crypto know how to do it with cold wallets or whatever. But the typical person uses an application in their bank and they want to have something similar in order to deal with crypto. Enters FTX. FTX realized that there is a huge market in the crypto world and they came up with this value proposition. Hey, we will give you a centralized exchange in which you can exchange different cryptocurrencies with one another and do it very easily within the comfort of your own sofa. So you wouldn't have to meet any stranger in Starbucks, give them a list of codes, and get a suitcase full of cash. So their value proposition is basically democratizing crypto, making it so much easier for everybody to trade in a single platform. In their peak, FTX were evaluated by more than $32 billion, a lot of zeros, and for comparison, Dell is evaluated at around $31 billion. The company is owned by a guy called Sam Bankman-Fried, and I find it hilarious that his name is Bankman, or in short, SBF. And SBF is a celebrity. He is welcome in Washington, meeting government officials, and he has Tom Brady and Larry David making commercials for him. So the guy is very much legit. FTX are having the time of their life. They're worth so much money, and then they come up with the brilliant idea of creating the FTT. FTT is the token to trade in FTX. Using FTT, you can trade various types of cryptocurrency. So you don't have to take your Bitcoin and pay something in order to convert it into Ethereum. Now you can do all of your tradings in FTT, the special token that is produced to you by your company, FTX. And in order to make it simpler, we can speak in other language that is going to be so much easier to understand. Casinos. So when you go to Vegas and you go to the Bellagio, you don't walk around with suitcase full of money. Typically, you go to the exchange and you take this and you convert it to this poker chips. And with the chips, you can go and you can do whatever you want. You can exchange them when you're doing your things that you're doing, gambling. And sometimes it's going to work, sometimes it's not going to work. But the main thing is, you know that Bellagio, when you come back to them and you give them this, they will give you back this. the exchange works. And that's where the system is built upon. You are trusting that these clay chips are going to be worth something because Bellagio is worth something. You trust them. You know they're good for their money, right? Well, this brings us to the shenanigans and what actually happened. And hey, this is all allegedly. Nobody knows what happened. I definitely don't know. I'm not a crypto god or whatever. Let me tell you the observations per the public knowledge. Allegedly, FTX took their clients' money and invested it somewhere. So when you gave your money to the casino and they gave you your clay chips, the casino took your money and put it in wherever. It can be stocks, it can be companies, it can be other cryptocurrencies, but they've done something with it. They are trusting that you are going to stay in the casino for a long time. Imagine that your trip to Bellagio is not just a day, it's a month, a year. So business is being conducted and everything is great. And then comes along this guy named CZ. And I'm so sorry for all the acronyms. It's just like, so this guy CZ, he owns another company called Binance. And Binance are also doing crypto exchange, and they're considering to go into business with FTX. And they look at the record, they look at the numbers, and for some reason, this guy, out of the whatever due diligence meetings, decides to drop his entire FTT inventory that is worth billions of dollars. This action caused a chain reaction. People are looking from the sidelines and they're like, if he's dropping all this money, maybe something's up. And they're starting to pull their money too. All of a sudden, all of the people come with their chips to the casino and they're saying, hey casino, I want my money back. And the casino is like, hey, you take your money. Hey, you take your money. You take your money. You know what? We're short. And when FTX feared that they can't really pay back, they started to hold their withdrawals, and all the people that didn't take out their money are now left wondering what is going to happen. And because this entity was, yes or not insured, it's under investigation, and we'll see what happened. And all of this story is allegedly, but it's people savings on the line. It sucks. And SBF, his fortune was evaluated at $16 billion, and it dropped to only 900 millions or so, even though that by the time this story ends, I am not exactly sure how much money he's going to have, if any. Hey guys, it's all from the future, and during the production of this episode, some crazy things happened, so I came back to give you the gist of what transpired. So a couple of updates here. Shortly after CZ dropped his stack of FTT chips, people started to take their money out. As we mentioned, there was withholdings, and then CZ said, hey you guys, stop it all. I'm going to buy FTX and I'm going to bail you out. And people were kind of excited for it. But unfortunately, shortly thereafter, CZ said, this company is heading nowhere. It's unsalvageable. I'm not touching it with a laser stick. So pretty much it's kind of gone. So unfortunately, it's really unlikely that FTX will be bailed at this time. But the other thing that happened is that more evidence come to light, and it seems like FTX did something kind of nasty. So they took their clients' assets, whether it was Bitcoin or Ethereum or other cryptocurrency or just cash. And they promised their clients that they're going to keep this in the safe. They put it aside, they're not going to touch it. When in fact, they used this money through another company of theirs to invest it, to play with it, to do whatever they want with it. In return, the investment division gave FTX FTTs in return. So if it sounds weird, let me explain it in another language. Imagine that the Bellagio took your dollars and gave you clay chips, and then they loaned the clay chips to somebody else, and that somebody else gave them in return clay chips. They would tell them, hey, I'm good for the money. Here's the collateral, more clay. But remember, if the Bellagio doesn't own anything, what are they going to do with this? It's just chips. It's not worth anything. So allegedly, that's what happened. Alameda Research, the investment division of FTX, took money, invested it, gave FTT back to this FTX guy, and then when they were under, the investment didn't work out well. Now the FTT is worth nothing. They have nothing to show for, and their clients' money is gone because they played with it. Super uncool, and not only uncool, I don't think it's really legal. So we'll have to wait and see what's going to happen next. Last but not least, SBF is fleeing from the Bahamas apparently. Nobody really knows his whereabouts. I am not sure that this story is going to end super well for him, but we'll have to wait and see. So that is the gist of the story of what happened with FTX and how billions of dollars evaporated into thin air. And it's not just huge corporations that took a hit, it's a lot of everyday folks. Even the Teachers Association in Canada invested money there, their pensions, which is just, it hurts. It hurts to even think about it. People lost their pension over these games that people played. Not cool. So what lessons are there from this entire situation? Well, I think the first lesson is to understand what are you investing in and why. If you are investing in crypto from the perspective of you being a day trader, buying this coin, selling that coin, making margins, hey, you do you. But if you're doing it because you believe in the technology, I am not sure why you're doing it from a centralized database. I think it's kind of missing the point. Now, of course, this is your decision to make and you do whatever is best for you, but just consider, why are you doing the things that you are doing? Are you doing it because it's trendy? Are you doing it because you believe in the technology? Are you doing it because this specific coin is amazing, or just because it shot up in value a bunch of time ago? There is a big difference between something like Bitcoin or Ethereum compared to something like FTT that was produced by a specific company. Now, I'm not saying that one is better than the other. I'm just saying conduct your due diligence really, really well. Which brings me to the next point. Advertisement and celebrities are no replacement for education and research. Make sure that you understand the things that you do. Don't just go blindly after people, especially when there's a lot of money on the line. Brings me to item number 3. If you are investing your capital somewhere and it's high risk, high reward, like these type of exchanges, make sure that you invest money that you are okay losing. Nobody wants to lose their money, but definitely don't put your life savings or pensions in this type of very volatile investment vector. It is risky. Understand the risk and make sure that it's the right fit for you. And what does it have to do with real estate? Well, we're seeing right now drops in prices. And I've seen my own portfolio reduce in value because the Fed increased the rates, the buying power of people got lower, and the prices dropped by 10, maybe 15%. Having said that, it is a huge difference compared to this type of situation that we're seeing values dropped by, well, 100%. And it's a very different situation compared to stocks that have been reduced by 50 or 70% if you follow, Amazon or Facebook. And all of that to say, real estate is definitely not perfect, definitely not for everybody, but the stability of real estate is kind of awesome. And when I look back and I look at my own portfolio and I'm looking at my exposure to real estate, I sleep relatively well. I'm not saying it's for everybody, but I do say that you should consider to diversify your portfolio to have some exposure to assets that, realistically speaking, can depreciate in 100% over the course of a couple of days. That is pretty much it. This is a bit different from my typical content, but I hope you find it interesting. If you did, please leave me a like. I would really appreciate it. If you like this content and you have ideas of other topics I should cover, let me know in the comments. I read all the comments, I answer all the questions, and I take the best ideas and I convert them into content. Last but not least, follow us on the social media. We have Instagram account and Facebook and everything, and I hope to see you on the next one.